This podcast is general in nature and hasn't taken your circumstances into account. It's important you consider your personal circumstances and speak to a financial advisor before deciding what's right for you. Any general tax information provided is provided as a guide only.
Hi everyone. Hi Shane.
Data?
So it's been a week since we last met, and it looks like what Trump is calling the 12-day war between Israel, Iran and I guess the US is basically over.
Well, we hope so. That would be really good news if it is. One might say, well, markets were right because markets didn't really fall much. I think the Aussie share market at its worst was down about 1% or something.
Yep.
US a little bit more, but not much in the great scheme of things. I mean, even less than you look at that history that you put together of geopolitical events. The average was an 8% fall. We only come down 1% or so. Oil price did go up a little bit, but not much in the great scheme of things.
So where did the oil price move to?
Well, you go back at the start of the month, start of June, it was about $61 a barrel. This is West Texas. I can never remember Brent. Brent's always about $1, $2, $3 more than West Texas. But anyway, they move in the same range. So West Texas starts at $61, got just prior to the invasion, Israel attacking Iran was about $68. Then it pushed to the high point, I think it was about $77.
Yeah.
But it was sort of mostly flickering around 76 or 74 or thereabouts, roughly speaking. I think at one point when I kept measuring it in terms of petrol prices, it was about a $15 rise. Then that's where we got those numbers. It could add 12, 14, 15 cents to the petrol price per litre. Then, of course, as soon as the US got involved in the war, dropping the bunker buster bombs in Iran or nuclear facilities, we saw that brief spike, but it didn't really get much higher than it had the previous week. Then, of course, we saw that instantaneous reaction as soon as Tehran or Iran just came back with a fairly symbolic attack on US base, and then everything seemed to settle down again, talk of a ceasefire, and all okay. And then the oil price is now back to below where it was, back to around $65 as we're talking. Which is below where it was just before Israel attacked Iran. So
we probably won't get much of an impact to petrol prices.
Well, on that basis, we won't because it wasn't
inflation.
Sustained. It wasn't sustained. It sort of faded away as an issue. And I think, you can still debate whether the issue has gone away completely. I think all three sides, the US, Israel and Iran, probably had good reason to pull back. Iran's thinking about regime survival, the regime surviving and not getting obliterated by the US. US maybe wants lower oil prices for Americans, doesn't want a lengthy war in the Middle East. Israel was reportedly starting to run out of missile interceptors. Both Israel and Iran are going to rapidly run out of things they could fire at each other. So maybe they all wanted a pullback, but there's still ongoing issues around whether the ceasefire will hold, whether Iran's nuclear capability has really been set back. There seems to be debate about that even in the US.
And that's what I was thinking, what has been achieved out of this? We're not sure that Iran's nuclear capabilities have actually been totally decimated or obliterated, as Trump said. A lot of newspaper reports, like the New York Times, came out and said that they haven't been, or that's just set back the nuclear enrichment program by a few months. Not really sure what the US got out of it either. I mean, Trump's approval rating has sort of actually ticked up a little bit in recent days, but I think he would have lost potentially some of the support from his ultra MAGA supporters. So where do we go from here? What are going to be the longer term implications?
Well, that's a good question. I mean, it does seem each time the US gets involved in the Middle East, there's initial relaxation of fears. If you go back to, say, the first two Gulf Wars, lots of uncertainty prior to those Gulf Wars in 1990 and then in the run up to 2003, and then the oil price falls and share markets take off, immediately the US starts dropping missiles. So maybe we've seen a rerun of the same thing. But then again, you could argue that those events sort of led to greater long-term instability, which wasn't too good. But it didn't necessarily lead to higher oil prices on a long-term basis. But you could argue the instability potential in the Middle East is still there. So I doubt it's the last we've heard of threats to oil supplies.
And then Trump was also saying, well, maybe we will get they do want some regime change in Iran, and Israel said similar comments, but they've sort of walked back from some of those. It doesn't look like they're actually targeting that anymore.
Well, in some ways it's a good thing. I mean, Trump, I think to his credit, it's a good thing that that he's not a warmonger, or I don't get the impression he is anyway. He genuinely doesn't like the fact that America got involved in those endless wars in the Middle East, which seem to destabilise things and cost American lives and America lots of money. And so that's a good thing if you can pull away from that. But then you could argue, well, he says all these things all the time. You never quite know whether to take him seriously or whether he's just saying it to be tough against Iran.
Yeah.
Now he seems to be a bit more friendly towards Iran. Told Israel to turn your planes around. Told China, yes, you can get oil from Iran. Maybe he's giving Iran a chance again. So maybe that's a good thing. I mean, the one thing I took, we were discussing this before, the unipolar world. I mean, we used to be in a bipolar world, the Soviet Union and the US. Then we had a unipolar world where the US was the world's cop. Then we're moving to a multipolar world. You even wrote a note on this on the geopolitics note, where lots of little regions have their own power in that region. Now you could argue, well, maybe the US is back again, but it's a sort of a different US. It's not as
balancing power.
It's a balancing power, but it's not as judgmental as it used to be. Not out there for a regime change, or probably not, depending on what day Trump's talking. But if people get really out of line, then the US will still drop a bomb on them. And if they're not happy with Israel, they'll say, well, you've got to pull your jets back. You could say that's interesting, that the US is still seeing itself to some degree as the world's police authority.
Mm.
I mean, for the time being, this just all tells me how difficult it is to use geopolitical events to time share markets.
Yeah.
Because if you just think about the two big, if you call tariffs geopolitical, maximum concern about tariffs back on probably April the 12th or thereabouts, whenever it was, share markets have plunged. And guess what? Then it turns around and goes the other way. Lately, lots of concern about the Middle East, flow onto the global economy, people reminiscing or with trepidation about the 1970s. And then, of course, just at the point you get maximum concerned, it suddenly turns the other way. So trying to use these sorts of events to time share markets, I think, is really, really difficult.
I guess all you can say is that it just creates more volatility in markets, in commodities and in equities. US dollar didn't perform as strongly as it probably has in the past at around the time of maximum geopolitical events. But that's more of a longer term story, I think, about the US dollar going to deteriorate because of investor concern about the future of the US economy. So I guess all we can say is that geopolitics creates more investment events that investors can potentially take into account, but it is very hard to time it.
You could argue it's more about the opportunities, trying to predict when they're going to happen. I think we've been talking about, and others have been talking about, the action being taken against Iran for a long time now. When it came as a bit of a surprise, the timing of it. Maybe it's one of those things that you have in the back of your mind and you're wary of them, but the real opportunity comes after the event because oil prices get pushed up and share markets get pushed down.
Yeah.
So what did you make of the Fed in the last week? Back to Trump, I guess. Trump's loves to call Powell, too late, Powell, muses about whether he should go to the Fed because he thinks he can do a better job than I think Trump thinks he can do a better job than everybody.
He also said he would do a good job as the Pope.
Yeah, he wants all of these jobs. So it's fun. It's so over the top that it's in some ways it's funny. But I reckon a lot of other people would be a bit upset by it. But you sort of wonder what it means for the Fed. So far the Fed just seems to be going about its own way and keep saying, well, we're in wait and see mode, or at least Powell does. And the Fed statements of a week ago seem to go down that path, although there are some going the other direction. So what do you make of all this stuff going on around the Fed?
Well, I guess another implication of the geopolitical events is that it may actually pressure the Fed to cut rates again a bit sooner. They've already cut by 1%, but some comments from two governors...
That's just worth pointing out. Trump did say that Europe's done, 2% or something like that, and we've got nothing. Well, America have actually cut rates by 1%. It's just they stopped late last year.
Yeah, he also gave some tips as to what he thinks that the amount of rate cuts should be at the moment. But anyways,
2.5, wasn't it?
Yeah, 2.5. Yeah, 2. I think it was 1.5, and then it was 2.5. So
he was going to say
it changes every day.
He was sort of hoping that it'll save the US government billions of dollars if he gets these rate cuts through.
Yeah. So Waller and Bowman, who are two governors in the Fed, actually sounded a bit more dovish in the past week. So basically indicating that they're more comfortable potentially cutting rates again at the next meeting, which is in July. So it's coming up. I mean, I get the sense that if we see some weakening in the hard data in the next few weeks, maybe the Fed can go again in July. Inflation's not really a problem in the US, but they have already cut by 1%. The labour market isn't slowing too much, but it's also not firing anymore. So there is the scope for more interest rate cuts, but there's no rush to cut rates either. And I think with all of the uncertainty as to where the tariff rates are going to land and when, because that deadline for tariffs is coming up in July and then in August for the China tariffs, we still don't have a deal on any country besides the UK and China.
Yeah, that's amazing. It's more than 2 months since the pause was announced, and the only
I guess
deal
he's been busy with what's going on in the Middle East. So
true, but that's only been the last 2 weeks. But even then, there didn't seem to be any progress. And you sort of get this inkling that countries like Vietnam are going to settle for 20 to 25% tariffs.
There was an article today on Bloomberg about the steel and aluminium tariffs potentially being up for a quota-like tariff. So there is going to be some more announcements on this, I think, in the next few weeks. But given all that uncertainty, I'm just not sure that the Fed needs to go in July at this stage. But it's very easy to see another few rate cuts this year, but whether it happens in July or in the second half, I think it's up for debate.
Because the Fed itself, the dot plot, which is a survey of all Fed officials who sit on the FOMC, even the ones who don't vote at any point in time, is about 14 or 18, I've forgotten the precise number. The median dot is for 2 cuts this year.
Yeah.
Money market, I think, was a bit more aggressive than that.
It has been interesting that the hard data in the US hasn't deteriorated as much as I would have thought it has by now.
A little bit of margin lately.
And the inflation figures haven't really moved up too much with tariffs, but maybe it's just a matter of time.
Yeah, could just be a normal delay. I mean, the thing that if you look at the jobs data coming out of the US, I know the unemployment rate's still low at 4.2%, but if you look at the Conference Board Consumer Confidence Survey, they ask people who thinks jobs are plentiful or harder to get. And the difference between the two seems to have deteriorated to its lowest point in this cycle, which would suggest the labour market is weakening.
But it's not collapsing.
It's not collapsing, no.
And then on our own domestic inflation figures, we got the May consumer price indicator. Great news. So headline inflation up 2.1% over the year to May, trim mean 2.4% over the year, a bit lower than economists were forecasting. And I thought that the components were also quite good. I mean, basically the only part of inflation that's still running a bit too hot is grocery prices or food inflation.
Yeah.
And maybe that's why people feel like...
It's eggs, isn't it?
Eggs, lamb and goat, my favourite.
And me, Boo, get obsessed with this. Yeah, eggs and lamb and goat.
But it was general. It was fruit and vegetable price as well. So I sort of feel like maybe it's some supply challenges or all the rainfall that we had earlier this year leading to some of those supply issues.
Why are the egg prices still up?
Because the bird flu.
Yeah, I know that. But if I go to my supermarket, there's plenty of eggs there now.
There are plenty of eggs,
So why hasn't the price come back down?
It's called lags, Shane.
It could be lags. I'm surprised some people don't come out and say it's gouging going on.
Probably. Well, there was a survey by Choice that a journalist asked me about today about the price differences across Aldi and Woolworths and Coles, and they still found that Aldi is still cheaper for groceries. So maybe there'll be more investigation into that. The productivity roundtable, I don't know.
The trouble I have is that the nearest Aldi is about 20 minutes away. So if I allow for the time cost of money, it's not worth my while to go to the Aldi. It's too far away.
I find that when I go to Aldi, I just go to the middle aisle and, there's always something interesting and I just end up wasting money on that.
But you find cheaper things.
But it doesn't end up being cheaper because I just buy stuff that I don't need in the middle aisle. Like, I don't know, a comfy blanket or something. I don't really need another blanket. And my kids always want, like they always have cool toys and they always want something from there.
My wife always gets good wine from Aldi.
And good biscuits and
it's
cheese.
A lot cheaper than elsewhere.
Yeah.
So...
But the services data in the May inflation figures I thought was quite good. So things like domestic travel, international travel prices, rents inflation, insurance inflation, the new cost of dwelling construction. I mean, all these problem areas that the Reserve Bank has been worried about seem not to really be a problem anymore. But so why do you think people are still feeling like there's this inflation problem? When I talk to people and clients, and we tell them that the inflation data has fallen quite a lot and that it's well within the RBA's 2 to 3% target band, I feel like a lot of people don't believe the data or don't believe me or think that their own basket of purchases is still so much higher than where the headline figures are.
I think it's the confusion between the rate of change in prices and price levels. So if you go back over the last 4 years, prices are up something like 20%. So it's up here, whereas your wages are up here. So it may be the case that wages now, what was the latest number, 3.4% wages growth, and the minimum wage was increasing 3.5%. That's higher, and it's now higher than the rate of inflation at 2.1%, which is all very good. So people are starting to get ahead again, but the level of prices is such that they're still behind if you compare it to the situation 4 years ago, because we're that period there where prices went up 8% in one go and wages were only 2%. So that's, I think, the main reason. So when you go to the supermarket, like I find, I don't think that my bill is going up as much as it used to, but it's still high compared to what I used to think it was, say, 4 years ago.
And maybe because we get news headlines about egg prices being so high and all these supply issues with food, which you buy all the time, you sort of feel it a bit more, or it's sort of in your face a bit more.
Yeah, I mean, as an economist looks at it, we just look at we're not so much concerned about what happened in the past. We're concerned about where we are now and whether that will be sustained. And we've got inflation headline 2.1%, trim mean, which is a measure of underlying inflation, 2.4 in the low end of the target range. So that's good news. There was a chart that Mibu put together which shows the percent of items. This is the different components in the CPI. You've got more than half with inflation below 2% and only a third with inflation above 3%, which is a good thing. So you could argue the overall picture is one of improvement, and that's the sort of thing the RBA likes to see and would suggest that they're in a position to cut rates.
So we have a meeting in 2 weeks.
Do you think
we're likely to see a rate cut then?
Well, I think we will. The good news is that when we changed our view 4 weeks ago, I think, to July.
After the GDP figures we changed
After the GDP figures. So that's beginning of June. Yeah, so we got softer than expected GDP. You got a run of softish retail sales, housing approvals on the soft side, business investment soft. Still got low unemployment, but everything else is on the soft side. Now you've got inflation easily in the target zone. So I think adds up to a case for them to cut. And the money market's talking about 94% charts, which is higher than it was. I think it was 84% just before this.
And do you think that anything related to the Middle East is sort of going to push them one way or the other?
Well, I don't think so now. I always felt that if the oil prices stayed at the levels they were a few days ago, then
you mean at the highs?
Yeah, the highs. Then it would add to inflation, but it would only be 0.2, 0.3% added to inflation. So it wouldn't be enough, I don't think, to derail the RBA from cutting. But if you saw a real crisis in the Middle East, actual disruption to oil supplies, such that the oil price went to $100 or $150, petrol prices would go up well above $2 a litre.
Yeah.
And then you would see a big flow on to inflation, and that would probably concern the Reserve Bank, such that they then delay it. But that didn't happen. I mean, the message in all of this in the Middle East is that what matters is supply. If there's a war in the Middle East, it's horrible, it's terrible. You see it on the TV, Israel and Gaza and so on. Syria and so on, but unless there's a disruption to oil supplies, it's not going to be of lasting interest to share markets and the oil market. So supply is key in all of this.
Yeah. Yeah, I think that the RBA has to cut in July just because the growth figures were too weak. And then I see a few more this year.
0.2 in the quarter. And most of the components are all weak.
This is for the GDP data.
The GDP data, yeah.
I think the concern is that consumption or household spending is not really growing at all, and the RBA's growth forecasts have been too optimistic, and they thought that inflation would also be a bit higher.
Yeah. So it just occurred to me, last time we were talking about productivity and you thought we'd all become lazy and off at the cafes and what have you.
I didn't say we were lazy. I was just questioning whether we had become lazy.
And I was saying, no, that can't be. We just changed our working habits. We're working at different hours. And then you discovered that productivity report, which for some reason I'd missed from back in April, Productivity Commission, showing that productivity growth in the health sector is possibly a lot higher than we're allowing, because once you allow for output in terms of people living longer years, more comfortable years, then that's a huge boost. And therefore, we're probably underestimating productivity in services sectors, or particularly health.
Yeah. I mean, also, as we move to a more services-based economy and more people are working in the services sector, I think that a lot of services employment, the productivity that you get in that would be underestimated because it's hard to account for quality improvements. Like, even if you think about our own work, how do you account for being able to talk to more people through doing Econosites videos or communicating to clients through different channels? That's a quality improvement, but it would be very hard to measure.
Well, it would be. This is the old debate. The communists and others think, well, the only worthwhile things are those that you do with a hammer and a sickle, agriculture and manufacturing. Whereas agriculture is now, less than 3% of the economy. Manufacturing in Australia is less than 10%. Most of the stuff we do is in the services sector. And people say, well, we need to make more stuff in Australia. Well, lots of stuff is actually made in Australia. It's the other 87% of the economy. Now, mining's a part of that as well. But a lot of that is service stuff. People do get value from watching TikTok videos or whatever it is. And they get value from their health professional helping them live longer, more comfortable years. But that's, oddly enough, I mean, to your point, it's not measured in GDP. Maybe the GDP numbers are too low. They need to get revised up. That's a sidetrack.
Well, I think so, but it doesn't change anything for the RBA. I mean, that's sort of a long-term problem for them. But
it could have an impact because their big concerns were that NAIRU, the non-accelerating inflation rate of unemployment, was above the level of current unemployment, and therefore the labour market was too tight. That's one concern, and there's a bit of a view that, well, maybe that's not the case, that full employment is around current levels of the unemployment rate because we're not seeing excessive wages growth. The other big concern they have was that productivity growth was too low, which is a concern that I must admit I've had and still have. But if the discussion that the Productivity Commission was referring to in relation to healthcare can be extended to other sectors of the service economy, then maybe productivity isn't quite as bad.
Well, one way that we could measure it in the future is just to look at how household real disposable income moves, and if that's still increasing and productivity isn't on the official measures, then I guess you could say that there's a measurement problem there.
Yeah.
Because usually the two move in the same direction.
They tend to.
Or very closely together at least.
That's true. Anyway, obviously I'm sure we'll talk about that a lot more in Australia, given the Productivity Summit coming up in August, which I'm sure will be a fun debate, particularly on the tax front.
And we should get invited to it.
Yes, we should. But I read somewhere there's only 25...
So I'm waiting for my invitation.
25 seats in this room. And once you allow for the head of the RBA, Productivity Commission, and people from the government, there won't be a lot of space in there. So maybe we won't make it. But anyway, that's it from Deanna and I for this week. I hope that was of value, and we'll see you next time. So see you, Deanna.
See ya.
For more info on Shane and Deanna's podcasts and reports, head to the Insights Hub at amp.com.au.